As we progress the Arcadia project along our pathway to development, we have maintained a strong focus on de-risking the project to the fullest extent possible. The board and management focus over the last 12 months has been on reducing risk and increasing certainty to accelerate the project funding. The stage approach presents the lowest risk approach and trades off some commercial advantages from the 2.4 million tonne per annum direct development pathway. We're progressing this pathway as we speak, and it continues to be the primary plan. For both of these studies, we've appointed Lycopodium to prepare the feasibility studies. And we selected Lycopodium for their EPCM abilities in Africa, as well as their experience in lithium globally. The approach with Lycopodium was set up to fully meet due diligence needs from potential funding partners and increase the confidence in the Arcadia project, which has been a key outcome. The focus of the stage OFS being the lowest risk execution pathway demonstrates the technical and economic viability of developing Arcadia via 2 modular trains, the first of which would operate for 4 years and the additional second train from years 5 to years 20. A major achievement being that there's a reduced project funding hurdle, as well as reducing execution and market risk. The study was completed by the leading consultants Lycopodium and confirmed the technical and economic viability of the staged approach, providing a high degree of accuracy and placing Arcadia amongst the best in the world in terms of scalability, production costs, and importantly, attractive margins at a conservative life of mine price forecasts, being significantly below current spot prices. So understandably, with a staged approach, there are areas where capital intensity is less efficient than a direct build approach. Key influencing factors include the utilization of semi-pre-constructed modules to reduce execution risk, increased process redundancy to reduce operational risk, increased equipment capacity as a means of increasing processing certainty, and a more comprehensive and lower risk EPCM model with increased contingencies to provide greater execution certainty. The global lithium market has gone from strength to strength throughout the year, with surging demand for lithium driven by the decarbonisation thematic, specifically for electric vehicles, seeing major supply deficits for broader lithium products. The Arcadia project is primed to become a globally significant contributor to this market through the supply of its high-grade products. Notwithstanding potential to supply the growing battery metals market, Arcadia is also positioned to supply the glass and ceramics markets with its premium petalite products, having offtake agreements in place with Tier 1 partners for both petalite and spodumene. In announcing our dual track process, we maintain that subject to favourable market conditions and availability of funding, the direct 2.4 million tonne per annum option would be retained. As is now evidenced by the current strength of the market, our focus will be on delivering the direct feasibility study and managing our ongoing partnership process. As I'm sure you can understand, specific details in the process are commercially in confidence at present. Having said that, the process is progressing in line with the expectations and the outlined framework led by Azure Capital and Vermilion Capital. What we are confident in is that the parties are all focused on our direct 2.4 million tonne per annum build. And that's because this partnership process is targeting a fully funded project, preferably with a competent technical partner that can work alongside Prospect to manage the risks in an acceptable manner. In terms of the direct feasibility study, the Prospect team and its consulting partners are fully focused on delivering this, and we expect its completion during Q4 this year. The details outlined in the recent staged OFS have allowed the partners to accelerate their due diligence on our 2.4 direct build pathway. As I noted earlier, the board and management have focused very carefully on reducing risk and increasing certainty. In progressing the staged approach, we completed significantly more test work and now far better understand the need for greater processing control, and this is added to the capital cost. Now, the upshot of completing the staged approach was a new reserve statement and material updates to the recovery, which we felt were essential to update our market on. So we're now very comfortable with the technical aspects and believe the direct approach will deliver some material efficiencies for the economics that will be attractive for the partnership process to consider. Thank you.